Well, Steve is here. Everybody, he doesn't really need an introduction, I don't think, but he founded Blackstone. I'll give two statistics, though, to try to give you a sense of, not that anyone needs to tell everyone about his import, but if you think about the number of employees that Blackstone has through its private equity companies, he effectively employs 620,000 people. I don't know where that would put you, Steve, in terms of the number of one of the largest companies in the country, if not the world. And
number 13.
Number 13, but who's counting?
Right. Who asked?
And then the other statistic to think about is that you are the largest owner of single-family homes in the country, and I don't mean individually, but as a fund. You could be too. So let me ask you this. We've had a lot of people that we've spoken to throughout the day try to give us a sense of where the markets are or where the economy is. I think that you have a better sense and better pulse of where the real economy is. So let's take the market piece out of it for a moment. Where do you think the economy that you see when you see those 620,000 employees and you see all of those single-family homes, what do you say is going on right now?
Well, we've had a long period of low interest rates that is finally starting to really work. So we operate globally, and so we get to experience every week what's happening in the world. And starting in the fourth quarter of last year, we saw the economy really go up. And right now, our companies are growing around 7 to 8% a year revenues, and 10% in profits, sort of double the S&P. The strength is coming from every place in the U.S. We're also the largest hotel group in the world. The RevPAR is going up at 10%, and housing went up. First year we started buying housing, that was unleveraged up 14. So if you leverage that and fixed up houses and rented those, those returns were quite high. And so we're seeing really healing. The financial system is in good shape in the United States, much less so. In other places in Europe, it's really quite discouraging. The most discouraging thing is how discouraged the Europeans are. And so you've got very little to no growth there. It depends which countries. And Asia is more spotty, but there's still really good growth there. So just because China's down, you'll still have good global growth. You have a much stronger U.S. dollar because people can see our employment growth, and if we average 3% this year compared to everybody else in the so-called developed world, that's pretty good.
So as one of the largest employers in the country, do you find yourself hiring? Do you find that you're hiring at the same rate that the rest of the country seems to be hiring? Meaning, so we saw 321,000 new jobs just last week was the number. Do you look at your companies and say, we're on the same trajectory? One of the big worries, of course, has been that companies have had lots of money. Some people have said they've been hoarding cash, and they haven't been hiring new people. Well, are we now at a point where there's enough demand for you to do that?
I think the whole hiring of people thing is complicated because of globalization, and also given the impact of capital expenditures, where those types of expenditures lead to much more productivity, is the issue of hiring people. At Blackstone itself, sort of the parent company, we're continuing to expand our assets under management, which is one way of measuring things, has been growing at 25, 26, 27% a year. So you don't do that without more people. So So we're finding, a pretty good expansion, with
Right.
people in the financial part of the business, for sure.
But what about the rest of the part of the business? The reason I asked, one of the comments that Lloyd Blankfein made earlier that everyone here might recall was he started talking about the word efficiencies and globalization and technology.
Right.
When you look at the businesses that you own and you think about labor as a cost, do you find that some of your businesses are finding new ways to either use technology or use globalization so that they're not hiring? And to the extent that that's true, how should we think about that?
Well, I think if it worked just the way you're saying, you'd have a longer-term structural problem. I think a lot of the businesses we're in, for example, if you take hotels, that's a human being business. Right. We have the second largest owner of security guards. That's a business which needs more and more people as you grow. We have the largest business that supplies janitors, and that just is not susceptible to that. You have certain types of manufacturing companies where those capital expenditures and other things do increase efficiency. If you look at the whole aggregate employee base of our businesses, they've been growing, and that's because if we're growing at double the rate of the S&P, we clearly need more and more people. If you were flat, you'd probably be able to engineer your business to not need more people, or maybe even gradually shrink.
Right. Yeah, you mentioned hotels, and you also own single-family homes, which I put the two together, and I think Airbnb. And I don't know if I've ever heard you comment as a hotel owner and also an owner of single-family homes, how you feel about the sharing economy and what Airbnb may represent as a competitive threat to the hotel industry, if you believe it is one.
Gee whiz, that's a whole different kind of thing, and we have not seen that impact, at all. The hotel business is really robust because what's happened.
The hotel business is really robust.
Really robust, and the housing business. I mean, think about this. Just analytically, when housing went down 40%, an average house somewhere around $150,000 a year, if you wanted to buy that house under the new regulatory structure in the United States, you'd have to put 20% down. So that's 20% down. So that's roughly $30,000. The number of people who don't have $30,000 in cash in the United States is around 45% of the population. So if half of your population almost can't even, under the new rules, even think about buying a house, that's why you have this big increase in apartments, because all you have to do is pay your rent. And so the government policies at the bottom of the cycle should have down payments that are significantly less so you can restart. So if you look at what we're doing by renting houses, we're basically just an equivalent almost of a multifamily, because you can just pay rent. You don't have to pay that big amount at the bottom. At the top of an economic cycle, what you want to do is have 20% or maybe more of a down payment so that you don't run away on the upside of people bidding things higher and higher. But once it's collapsed, you want lower payments up front to restart the economy. So we've done this absolutely the opposite, and consequently, we've diverted some demand into multifamily. So I don't look at what we're doing as anything other than efficacious for people in terms of what they can afford.
Flip it around. We had talked to Paul Singer earlier, who made a persuasive case that the Fed has effectively created, or at least exacerbated, inequality in this country. That the idea that folks who have assets, who have money, have been able to buy up single-family homes or homes, for example, or their values have gone up, whereas everybody else has been left behind. Do you believe that?
Well, not necessarily with homes in that sense, but the Fed had very limited options after the financial crisis, and we had dysfunctional politics. You could pass almost nothing. We had an economy that was dead, and so what did the Fed do? They basically dropped rates and popped up asset values. So why did they do that? They did that because they wanted to have somebody institutionally, mutual funds, others, to create wealth. And the wealth enabled society to re-equitize its position and go out and borrow money, buy things, build things, do other things. So this was a pretty purposeful plan because I don't know what else you could do to get the economy going. It's been followed by just about every central bank in the world that could do it. And so you have to get your economy going. And if you don't have a fiscal stimulus and you don't have a cooperative political environment, it's just on the central bank.
Ray Dalio made the comment earlier, an argument earlier today, that we might be fine now as an economy, but 2 years, come 2 years from now, when we really realize that there are no quivers, no arrows in the quiver left, and we really can't do anything, that maybe we could stumble. I don't know if 2 years is right or wrong, but what keeps you up at night? What do you worry about?
I worry about a lot of things. That's how you can be an old person in finance. It's only people who don't worry who get into trouble. And I've got sort of a laundry list. I worry about basically government policy as my biggest concern, whether it's regulatory or accidental creation of illiquidity in markets as a result of the other's safety and soundness kind of activities. Markets are much less liquid, and that creates its own issues. So I worry about that. I worry about regulatory over response, which certainly has affected other parts of the world. You could worry, though I don't, about the central bank raising interest rates to the point where they throw the economy into a recession. Some people appear to worry about that. I don't know why. These are smart people, and that's the last thing after 6 years of struggling to create something like 2.5% to 3% growth. I don't believe for a minute that the central bank's going to do it, but if you like to worry and you're in the media and you have nothing left to talk about, you could worry about that. I found that more bad things happen with more bad governments. And this is around the world because we operate globally. And when you have really smart people in government and good processes, those economies tend to do amazingly well. And that's a thin reed, right? It's either one election or something like that.
You recently raised a new energy fund.
Yeah.
The timing. Is this a great time to be investor? Are you going to be able to buy stuff on the cheap in 6 months from now, and a year from now, or is this a horrible time to have just raised this fund?
This is a wonderful, wonderful time because, this is a commodity oil. I mean, this isn't it's not patent protected. And, commodities go into undersupply and oversupply. There's some reason to believe that, with U.S. energy production up, so high that, we've thrown into a little oversupply, and for a variety of reasons, the Saudis are not stabilizing the price of oil, and so it's going down. There are a lot of people who've borrowed a lot of money based on higher price levels, and they're going to need more capital. There are going to be restructurings to do. There are going to be securities to buy that are oversold.
Are you suspecting that there's going to be a big fallout from all this? Is that what you're...
I think there's going to be a fallout. I can't tell you how big, but I like buying things cheaper than more expensive. This is becoming cheaper. I was talking with, last month, with the head of one of the biggest oil companies in the world, and I said, what's going to happen to oil? And it was very funny. He said, well, since the crisis, I've seen it at 30, and I've seen it at 120. And he said, all I know is it goes up and down. And this wasn't the most inspirational analysis, but nonetheless, it's true. And so we're going to be in a place where typically, things run further than they should in markets, particularly when everybody starts getting scared and so forth. So I think this is going to be a wonderful, wonderful opportunity for us. I mean, it's going to be one of the best opportunities we've had in many, many years.
You recently met with President Obama last week as part of the Business Council, and I just thought it would be interesting to talk a little bit about whether you think that, I know you said you worry about regulation, you worry about taxes and all the issues in Washington. Did you notice any kind of market shift post-election in how you think he's approaching it, or how the conversation, because you've been having these conversations with him over the past 6 years now?
Yeah, I thought he was very reflective. It's clear there actually was a midterm election, and I think that he was certainly evidenced openness to deal with Boehner and Mitch McConnell.
So does that make you optimistic that you will actually see a change in terms of some of the things that you've pushed for?
He was pretty straightforward, and he said, look, there are basically three piles of things. The first pile, strong views where there's no overlap, so nothing will happen on those. The second pile is where we, sort of are close to agreeing on different types of things, and that's a negotiation. The third pile is stuff that we all agree on, and that'll just happen. And so the action is in that center pile. I think from talking with the senior leadership on the Republican side, they'd like to do a bunch of stuff because it's good for the country. One of the things that I've observed from going to Washington over the last 6 years is that I've never seen so many frustrated people in the Congress, particularly in the Senate. The House is frustrated. They basically say, we pass bills all the time. They go nowhere. The senators, Republican and Democrat, basically say, we haven't done anything in years. We're frustrated. My experience in life is that when everybody's frustrated and you remove the blockage, they'll just start doing things because that's why they were elected. It's almost embarrassing to have been a senator over this last 4-year period.
Let me ask you this. Mary Jo White was here earlier, and one of the things she did talk about was she wants to look at asset managers. She wants more disclosure. She wants more transparency. There have also been pushes, as you know, from pension funds, public pension funds, who've said, we really only want to buy into these funds if we can disclose and there's more transparency. The public should get to know what the deal is, what the fees are, how it works. A lot of the funds, including Blackstone, have pushed back on some of those ideas. Do you think that that a public pension fund, for example, that represents the people, should have the opportunity to publicly disclose and have full transparency around the investments and the fee structures and all of the things that happen?
Well, it's very interesting. The alternative asset industry has been a huge success. The rates of return, a firm like ours, private equity, a public fund would make 800 to 900 basis points over liquid markets, real estate 1,200.
Right.
It's the best performing asset class, nothing close. The mechanism for the relationship, the structure of the relationship, are very long, highly negotiated agreements. They go hundreds of pages. Every investor has their own lawyers. Both sides more or less beat themselves to death negotiating this stuff, and everybody knows the terms in it. Until this recent, actually it was Dodd-Frank that put this industry under spotlight. Almost everybody was happy on both sides of everything. So this is newfound friction that's come from Dodd-Frank. It's not about performance. It's not about the terms. It's about, interestingly, imagine that an industry that's composed of thousands of little companies has to get in line to do things like large public companies like ourselves.
But do you think that if you're going to take public money, that there should be some more transparency around? I mean, just conceptually.
I think in terms of transparency, once the SEC gets finished with, I mean, imagine a little private equity firm with $100 million, which may sound like a big number, but it's quite small given the trillions of dollars that are under management in the money management business, that those firms are not set up to comply with regulations that basically are designed for firms like ours. We have enormous transparency, and we've been regulated by the SEC for decades, and there's not a lot of mystery in that. Some of the information is competitive, but within every one of these investors, Andrew, everybody knows the terms. There's no mystery or lack of transparency within the investor group.
Final question for you. You recently sold the Waldorf Hotel here in New York to the Chinese. There has been the Waldorf has long been a place where the President of the United States has stayed. Do you think, if this transaction goes through, that the President should still stay at the Waldorf?
Well, Hilton, which is one of our portfolio companies, will have a 100-year management contract. I would hope that the President of the United States would continue to stay there. The Waldorf is being sold to a Chinese insurance company, and almost every upscale, five-star hotel in New York City is owned by a foreigner. Almost none are left owned by Americans. This purchase is within, sort of a very normal thing, and we'll see what happens with that. I hope the President would stay there. It's going to have a lot of capital expenditures made on it, and he should like it more.
Fair enough. Steve Schwarzman, thank you very, very much.